G'day guys, welcome back to the Devon Too Good Investing channel. Today in this video we're going to be looking at the three main reasons why Alibaba's growth has slowed down in the fourth quarter of 2021. So recently the earnings came out and it was quite clear when they came out with roughly 10% revenue growth that this is well below what they've done in the past, where they've constantly beaten at least 20% revenue growth year over year, quarter after quarter. But guys, before we get into those three reasons, make sure you like this video, make sure you subscribe to my channel, and let's get right into it. Alright guys, so the first reason why Alibaba's growth has been slowing down this quarter is due to a slowdown in China's overall GDP growth. So recently, over the previous quarters, China's been doing at least 5% growth in GDP year over year. However, China's GDP growth only grew 4%, while total retail sales only rose 3% year over year. And this information comes straight out of Alibaba's earnings transcript from their earnings call. So the management puts this down to the confluence of COVID. As we all know, COVID went crazy during the fourth quarter of 2021. And also inflation, and we also know inflation's been going crazy, and it's caused the prices of raw materials to increase. Now, the second reason is due to one of the management's decisions. So, the management team decided to waive merchant fees in order to increase retention. So, pretty much what they're doing is saying, hey, merchants, we're not going to charge you as much, or we're not going to charge you at all to stay on our platform. However, because they're not charging their merchants very much, this could be widening their competitive advantage in a way, because Alibaba's a lot bigger than some of their competitions such as JD.com and Pinduoduo. So the fact that Alibaba are able to eat this, and their growth has slowed and they weren't as profitable. But hey, they're going to keep merchants on their platform if they don't have to pay much, especially since it is the biggest e-commerce platform in China. But yeah, this has increased retention, and they are doing this in light of stronger competition from the likes of JD.com and Pinduoduo. Overall, how do I think about this? Well, there's two ways of thinking about it. It's pretty much profits now versus profits in the future. I believe this will probably help Alibaba grow in the future, just because it's going to make them more attractive for their merchants to just stay on their platform. And obviously, it's going to hurt in the short term because now, they're not charging their merchants as much. Now, the third reason is very tough year-over-year comps, and I'll show you exactly what I mean. So what you're looking at here is a revenue chart over time for Alibaba, and the line here represents the change in revenues year over year. So if we jump here and look at the change of revenues year over year for the December quarter of 2020, you can see that revenues actually grew just about 37%, which is extremely quick. And then if we look over here to the December quarter of 2021, revenues only grew 9%, but they were going up against very, very fast growth back in 2021. So I almost think that there's been a pull forward in demand due to COVID and working from home and just that shift to e-commerce in general. And I feel like a lot of growth that would have came this year instead came last year. And overall, this comp should be easy, or a lot easier for Alibaba going next year. And I do believe that they will grow more than the 9.72% they did in this quarter. But nonetheless, this hurt their growth for this quarter, as it was very tough. And if we jump over here, if we just take their annual growth rate over the last 2 years, so from 2019 through to 2021, their revenue's gone from 161 billion to 242 billion. So this is in RMB. But anyway, regardless, it doesn't matter what the currency is. It's their revenue over 2 years grew at a CAGR of 22.5%, which is very strong. So if you ignore if you look at their revenue growth over sort of a larger time frame than just 1 year and you normalize it out, you can see that there's growing very strong still. And do I think they'll grow 22% again next year in the 2023, or sorry, the 2022 fourth quarter? Well, probably not. They probably won't grow 22%, but I would be surprised if they grew slower than the 9.72% that they delivered in this quarter. So guys, those are my 3 reasons right there. The first one was due to slowing GDP in China. The second one was due to the management's team decision to waive some merchant fees in order to increase retention on the platform. And the third reason was due to very tough year-over-year comps. So guys, I hope you enjoyed the video. Make sure you like and subscribe, and I'll see you in the next one.